is the next company which is on our focus, one of the largest public sector banks, one of the largest banks as such. Well, numbers came in slightly maybe below street expectations. Loan growth came in, I think, about 11%. Margins were flat. Asset quality is improved, though. Mr. Atul Kumar Goel is Managing Director and CEO at the bank. He is joining us now to take some questions. Mr. Goel, good morning, sir. Thank you very much for your time. Prashant this side. Could you talk to us a little bit about what should we expect in terms of loan growth in FY25? Would it be up north of 11%, what you did in the quarter gone by? Just give us a sense, sir. How are things looking?
Yeah, very good morning, Prashant, and welcome to all the viewers of the CNBC-TV18. As far as credit growth is concerned, the guidance for the current financial year is around 11 to 12% also, as against the 11.20% we have achieved in the last year.
Okay, so between 11 and 12% for the full year FY25. What about net interest margins, Mr. Goel?
Net interest margin, we are giving the guidance, it will be more than the 10% for whatever we have achieved in the 23-24, and the same, if you see the last year also, the growth was last quarter on the same line.
No, I meant margins, sir.
Margin as 3.23 was the margin for the domestic as well as the 3.10 for the global. And last year also we have given the guidance for the 2.923. So same guidance we are continuing for the current financial year.
All right. Good morning, sir, and good to see you. Give us an estimate about recoveries for FY25. Will it come in from NCLT cases or IBC cases?
It will be the mix of the all, because if you see my kitty for the NPA 90,000 rupees, 90,000 crore is the TWO and 46,000 crore rupees gross NPA. So it will be the mix for all the small as well as the corporate from the NCLT. Last year we have recovered around 3,300 crore from the NCLT. The same number we are expecting in the current year also. Overall guidance for the whole of the year, around 18,000 crore rupees we will recover from the NPA in the 24-25.
Okay, 18,000 crore rupees you'll recover. So what is the gross NPA target by the end of FY25? I didn't get that.
Gross NPA 5.73 we have achieved on the March 24th. So it will be below 5% as far as net is concerned. 0.73 it was in the March 24. It will be below 0.50 by the end of the March 25.
Okay, so gross NPAs you're saying will be below 5% by the end of FY25, currently at 5.73%. So there's further recovery expected. Any fundraising plans that the bank has in FY25?
As far as fundraising is concerned, we have already got the approval from the board for 7,500 QIP, 7,000 crore rupees for the 81 and 3,000 crore rupees for the Tier 2. So total plan for the 17,500 crore for the current financial year.
Okay, Mr. Goel, the other big talking point lately has been, of course, this entire bit about project financing and how one has to raise, standard asset provisioning for that. We heard from the SBI chairman after the results, and we've been sort of speaking with others as well. Could you tell us what is the exposure there for PNB? And should we expect any impact whatsoever on any metric if this does indeed go up to 5% in a phased manner?
Prashant, although it is a draft guidelines and the view has been taken from all the stakeholders, from the regulator on the till 15th of the June 2024, as far as our bank is concerned, so our total exposure in the infra is the around 92,000 crore, and 50% of that will come under this category. As far as PNB is concerned, there should not be any worry if the final guidelines is coming for making any provision also. That is not an issue at all in the Punjab National Bank, because now our balance sheet is very strong.
So 45,000 crores is exposure to project finance, which gets impacted because of this if it does go up to 5%. But you're saying that there is no impact.
Although RBI is giving the 3 years time for that also, because 5% we are not required to make immediately.
Sure, and that 3 may become even longer. Depending on, we'll have to see the final thing. This is, of course, only draft guidelines, and we'll see what really comes of it. But you're saying there's no impact because of this, right? Even if it goes to 5.
Yeah, whatever the impact will be there on account of the higher provision, as I told you, we will be in a position to provide, and we will pass on the whatever the impact to the credit debtors also. Yeah.
Okay, all right. Final question, sir. Before we let you go, your annualized credit cost, that's come in at the lowest levels in the last 9 years. Could you give us a guidance on that number, point number one? But your OPEX, that's moved higher. I think the cost to income is the highest in 10 quarters. So give us a guidance on both these two numbers, cost to income, as well as if you could give on credit cost.
D'Souza, first I will give the answer of the credit cost. Credit cost, if you see, the last quarter it was 0.80 and for whole of the year it has 1.40. So we are giving the guidance for the credit cost. It will further go down. It will be less than 1% for the 24-25 because provision coverage ratio is already more than 95%.
Okay. Sir, you gave us your guidance on asset quality, but I didn't get the slippages number. Would you have any sense of which way the slippages are going to go in FY25? What could be the average, slippages per quarter?
Slippage for if you see the last quarter, it was 0.98 and whole of the year it was 0.70%, and we are hopeful it will be less than the 1% in the current financial year.
Okay, it will be less than 1% in FY25, you said, right?
Yeah.
Okay, got it. I had just one more question. We were just speaking with another banker a while back who suggested to us that there is recovery in certain pockets in the rural market as well. But, overall MSME, rural, there are still some pain points. In terms of loan growth, where are the pockets of pain that you're still feeling, which could perhaps lead to muted loan growth going forward?
Loan growth, if you see the focus area for the bank is the RAM, retail, agri, as well as the MSME also. If you see the growth in the total advances was 11.20%, but growth in the retail was around 15%, and even for the housing it was 14%. The vehicle there was a growth of around 25%. The growth is also coming from the rural and the tier 2, tier 1 city also.
All right. Mr. Goel, we'll leave it there. Thank you very much for your time. Appreciate it very much here on CNBC TV18. I think we'll take a quick commercial break here.